What is going on, everybody? Today we're in a brand new video. So today we're going to look at two beat down stocks and we're going to see whether or not we should buy them. So let's first of all look at Nike, right? Nike is absolutely beat down. Absolutely beat down. So let's look at this, right? So they are down from 28, so 30% since their earnings report. Now the question is why? Let's get straight into it. Now, first of all, I would like to go onto Nike. First of all, understand why they are such an attractive business. Now, the reason for that is that here you've got Warren Buffett on moat. Buffett knows how to invest and grow money and explain that economic moats do matter. A truly great business must have an enduring moat that protects excellent returns on invested capital. Moat basically means is that you've kind of sort of built a wall, around your castle so that no other competitors can sort of break into that wall, and you will always have no issue in terms of competitors. And obviously, that's understandable. No one can match their every single year $4 billion in Nike's advertising and promotion costs, right? Nobody can beat that. Absolutely nobody. Absolutely nobody can beat that, right? Last time I went into a Nike shop, right? And not even a Nike shop, a sports outlet. I literally only went to a sports outlet. Nothing to do with Nike. What did I see? I felt like it was a Nike store. Nike. Everything is Nike. Everything is Nike. Furthermore, all of their competitors, Lululemon, whatever it is, Under Armour, they're all going down. It's incredible, right? So let's look at the reason why they went down. That's the reason. They decreased. They went down. They had one of their first negative years, -1. That's the reason. And even if you look at the last quarters, right, it was pretty flat. Like here, flat and flat. But in this time, it was growing very fast. Now let's look at why, right? So first of all, I want to show you, right, so the fourth quarter revenues were down 2%. That's why they went down. And if you look at the entire fiscal year, they were only up 1%, which isn't really good. And why is that, everyone? Why is that? That's the question, right? Well, the reason for that being is, let's look at this. Consumer sentiment. Look at this. Doesn't that just look disgusting? From 1995 to now, we are on a downtrend, right? Like right now, we are on the same level as the 2008 crash. We are on the same level as the 2008 crash. Can you believe that? 2008 crash was the same level at a period, right, where we had like 10% unemployment rate, and we were at the same global sentiment. And why is that? Because in this time, the Fed tried to stop inflation. Simply put, they tried to stop inflation, right? So that's why we're going down. Interest rates, people just don't want to buy stuff, right? But that's not gonna last forever. Now that we're in about 3% inflation rate, Joe Biden is not going to continue doing that forever, right? They're simply not going to continue doing that forever. He's not going to raise interest rates every single year because they're already at a perfectly fine inflation rate, and they don't want to go into deflation time, right? That's the worst thing. And when Donald J. Trump comes in, if he comes to president, it's going to be even better. He's business related. He's gonna stimulate the economy. And if that happens, guess what? Consumer sentiment, absolute skyrocket. And that's where I see the beauty in this stock. That's where I see it. I think that in 2025, 2026, 2027, 2028, they can grow at 9%. I think that. Because of the consumer sentiment, it's going to increase. And so if we actually do this with the stock right now, the net income growth, I mean, they could probably grow even more than 14%, but anyway, then we come to EPS, and they should have a PE of about 25 to 30 as being as a normal company, right? which means that their share price, low or high, in 2028 is going to be at 141 or 169 in the high case, meaning that if we now go on, oopsie daisy, if we now go on Nike stock right now, we're at 74, meaning that we can have 18 to 23% growth. I mean, it's a buy. It's a buy. Now the question is, will they be able to get these 9%? I think so. Do your own research. The next stock is one that dipped, and it dipped hard. Amazon.com Incorporated, down 9%. Man, look at this. Oh, 9%. 9%. But actually, I am going to buy even more. I'm going to buy in the stock. And why? I'm going to show you. First of all, let's look at the company, right? They have a P/E ratio of 47, which should intrinsically be higher. Why? Because they're basically a cloud business. Because nobody really cares about their Amazon. The revenue growth is pushed by what? By their Amazon AWS and not by anything else. And that's why they're growing here. They're growing like 13%. You know, that's not bad. 13% they're growing, right? In the last couple of quarters. So if we look at the net sales again, like they're up 13%. And AWS, they're up 17%. And I believe that this intrinsically, like mathematically, their revenue growth, their quarterly growth is going to increase even more as AWS takes bigger portion of the revenue as a percentage. And they're growing faster. Now, why is it that they slumped? Right, let's look at this. Revenue in the second quarter rose 10% from a year earlier to 147 billion, falling just short of the 148 billion projected by LSEG. Right. Net income at Amazon nearly doubled from a year earlier, which is 126 a share, topping analyst estimates. So EPS beat, revenue miss. However, for the third quarters, which runs through September, Amazon said it expects revenue of that. The midpoint is that, which fell short of consensus. That's disgusting. But who cares? Why? Because the AWS revenue reached 26.3 billion during the quarter, topping consensus of estimates of 26 billion. And that's the only important thing. AWS is the only important thing. Who cares about their Amazon, their business? Who cares about Amazon, the buying of it's not growing. It's simply not growing their normal business. But their AWS is growing. And that's the only thing that matters. Who cares if Amazon as how you know it, right? As the online merchant, if that falls 1 or 2%. Why? Because AWS has 20%. So anyway, if for me it's okay, AWS revenue reached 26.3 billion during the quarter, topping consensus. That's the only important thing for me. Above all that, let's say that analysts at JP Morgan Chase said that Friday they were less worried about the retail miss and more encouraged by continued strength in Amazon's cloud computing segment. That's all you need to know. It's a huge buy right now. 10% reduction on Amazon stock for a beat in AWS revenue, right? So Nike, let's make an overview. Nike, I'm not gonna buy yet. I'm gonna wait for the next quarterly earnings, but it's a good stock. And AWS already picked some up. I already picked a couple of stocks up because it's a huge buy opportunity. I mean, they slumped 10% for a reason that I don't really agree with. So it's a stock I bought, and I think they're gonna go much higher. Anyway, guys, do your own research before you buy the stocks. It's not financial advice. Peace.